You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was, and indeed still is, on the futures options side of the fence. What are we going to talk about today? Ags, metals, rates, equities, FX. You never know. You got to tune in every week to find out. My name, of course, Mark Longo from theoptionsinsider.com. We're the only one, theoptionsinsider.com. That's the place to go to check out all the stuff we're going to talk about on the show today. Get previous episodes of TWIFO as well as all the other shows we do here on the network. Of course, if you go to theoptionsinsider.com/pro, that's the place to go to get access to the exclusive content we make available to you via our exclusive Pro podcast feed. For all you newcomers in there, like 160 odd episodes in there already, so you can really catch up on a lot of great exclusive content. We've really picked the brains of many of the great minds in the world of derivatives. You can hear it all, as well as great unusual activity on options oddities. Of course, you get access to that Pro podcast feed. You get live access to everything we do throughout the week, so whenever your schedule allows, you can join us there as well. And of course, great giveaways, like we just gave away our September Pro Trading Crate. Congratulations to Olivier Mba. Always love to send out that fun stuff over there. Theoptionsinsider.com/pro, or for you cool kids, /secret club is the place to go. We've had a slew of great guests on the show over the last few months out there, just really exploring all the different areas of all things futures options. So we're going to just dive deep into the analysis today, dive deep into the nitty gritty as we dive right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything moving to the light side, aka the upside, and to the dark side over there at CME Group this week. And since it's just me holding down the CME Group and FTSE Russell hot seat this week, I get to pick, which is always fun. I love all of our guests, but I also love I get to sit in the driver's seat and determine which way we go. And you know what? It's one of those rare weeks, listeners, where we're pretty much evenly split yet again. Slightly more red than green on the tape this week, but for the most part, it's pretty evenly split. We could probably do at least a top 20 to the upside and more than that to the dark side. So that means we have a pretty evenly split week. No more of these dark four or top three. Nothing like that on the show this week, listeners. And because it's just me, and because I'm going to buck the trend, let's go to the light side first. Because why not? And to number 5 we go, our top light side movers this week, listeners. Number 5 is oats, up 3.21%. So we're hanging out in ags first here. And before you get all hot and bothered, say, give me them oats on the show. 10 contracts on the tape this week, listeners. So I wish we could. I wish we could give you all the oats and then some. But alas, not quite a big option story to tell there yet. We'll keep an eye on it, though. Speaking of growing option stories, staying within the ags complex for number 4 here. Going out to the livestock, our old friend Lean Hogs, hashtag Hoglove, back on the show this week, up 4.02%. And lean hogs, again, used to be kind of anemic. I mean, it wasn't quite as anemic as oats, but it used to be pretty light on the options front. This week, 22,000 contracts. So that's getting into silver territory and more than a lot of the other metals outside of gold. So that's certainly respectable. We could certainly hang our hat out there this week. Number 3, still staying in the ags. A lot of ags this week, listeners. It is soybean meal, up 4.32%. It was number 2 to the dark side last week, off 2.82%. And you know, the beans do some paper throughout the entire complex, the meal, the oil, the beans. The meal in particular doing about 32,000 contracts this week. So we could certainly hang our hat out there. Number 2, we're off to energy, listeners. Not maybe the ones you were thinking. Nope, it's heating oil, up 4.33% this week. It was number 1 in the same direction last week, up 13.41%. So banger couple of weeks here for heating oil. And it does some paper. I mean, it's no oats, but it's also not a soybean meal. It does 3,000 contracts on the tape so far this week. So it's something, but not a ton out there. Certainly, if you get into energy, there's other products that do a lot more. And then number 1 to the light side, one of our 3 frequent offenders. I've called for it many times. I would love to have more options volume on this name. This, to me, has been the lost name for a lot of the pandemic period for a lot of people out there because there really weren't any options on it. So this is lumber. Dead trees have been whipsawing all over the place. Keep your crypto, keep your equities, keep your memes, and keep everything else out there. It's lumber. Just blowing the doors off everything from a vol and everything else perspective over the last few years. Up 6.22% again this week. And it was number 3 in the same direction last week, up 10%, so up 16% in the last couple of weeks out there. So quite the run for lumber. Again, that's almost nothing. That's like a rounding error for lumber these days. We've seen it up 20 plus, 30 plus % in a week. And, you know, we talked last week on the show about these new smaller sized lumber options hitting the tape. Still waiting for those to really start percolating out there on the TWIFO reports. But it does seem like maybe they're having a bit of a ripple effect because they ran the numbers right before showtime. And lumber actually has 62 contracts on the week. Now, you might say that's nothing, and it isn't a ton, you're right. But for lumber, some weeks can do 3 contracts. That's actually a sign that perhaps things are moving in the right direction. Perhaps these smaller contracts are starting to accrete to some more volume in the bigger ones. And maybe someday down the road, a future iteration of TWIFO, dare I say it, we can finally parse some lumber options. I think we're all waiting for that day, listeners. I'm curious, have you folks dipped your toes into the smaller lumber contracts? Certainly is intriguing. Certainly is an attempt to make them more appealing to retail. And you can't argue with the vol out there. It moves. So An intriguing thing nonetheless. We'll keep an eye on lumber as we move to the dark side now, listeners. Extent of the dark side is a little bit stronger than the light side, even though, and there are more of them obviously this week, even though raw numbers wise, they are pretty close. Let's go to number 5. It is Bitcoin off 5.62%. So far we got 2 of our 3 frequent offenders on the list, and one of them is topping the light side this week. So our 3 frequent offenders: Bitcoin, lumber, and nat gas. Let's see if we can find our third here. Number 4 is Eurodollars off 6.79%. Number 3, its replacement, 3-month SOFR off 7.21%. It was number 3 to the dark side last week, off about 2.4%. Number 2, back to the metals, it's palladium off 7.23%. And number 1 to the dark side, still hanging out in the metals, 8.74% to the dark side for silver. You remember last week, listeners, we were kind of surprised. It was myself and Dan Gramser. We were talking about the massive upside move that silver had last week, up 9.53%. And it has pretty much given almost all of that back this week, off 8.75%. So we were trying to speculate what was going on with silver. The precious metals have underperformed, I think, to put it charitably, for most of the year. Maybe silver was trying to make all that up in a week, giving all that back now, or almost all that back. And doing some numbers as well, 32,000 contracts on the tape. So it's up there with beans as one of our more active, outside of obviously the madness of the rates complex. And silver putting up 50,000 contracts last week. So silver has been putting up some numbers. Usually it's around the 22,000 range. So that's a pretty decent clip for metals. So we've got metals, we've got a lot of ags, listeners, we've got some rates, and we got a little bit of crypto in our movers and shakers this week. So I think we have to start in the ags first.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. By the way, you guys know where to go to find these reports for yourselves. CMEgroup.com/TWIFO, TWIFO, is the place to go to get access to these completely free reports. And if you're intrigued by them, you want to learn more, maybe dip your toes into a trial of the more advanced stuff over there at Bantix. We just had the creator of Quick Strike, Nick Howard, on our Pro Q&A this week. He was answering a lot of your questions about all trade constructions and how things go up, and data and access, all these things going on in the still relatively opaque world of futures options. So if you're on the pro side and you missed that, make sure you check it out on the Pro podcast feed. Of course, you know where to go /pro to join the party there. Listeners get access to that, all the other episodes we've done over there. But we were talking about some of the volume going up in some of these names with Mr. Nick. And if you want to check it out for yourselves in terms of the the pro level reports, you can do that. Bantix.com, Bantix.com. Click on the free trial link there, and that'll get you off to the races in terms of not just the TWIFO reports. That's really just the beginning. You focus on that for the show. Obviously, they were created for the show. It's the name of the show, after all. But there's all sorts of other stuff. They have great quick sheets. They have an Explorer tab, which I, frankly, myself need to dig into more. It offers a lot of great stuff, including if you want a quick recap of what's been going up in some of these names. It'll do that for you. It's really impressive. So we kind of just scratched the surface. If you want to do a little bit deeper dive, Bantix, Bantix.com is the place to go. Tell them we sent you here on TWIFO. Nick will be ecstatic as he can get. He's not the most ecstatic of guys, but he'll get pretty excited for that, I would think. As we head on into soybean meal, that's in the ags, listeners. Pop up there. It's right at the top of the asset class list. Then we're going to grains and oil seeds, the product family. Then we're going to go down 4 slots to soybean meal. If you don't follow soybean meal, 411.40 is where it's hanging out right now, listeners. Up about 2.7% or almost 11 handles on the week. In terms of action, like we said, about 32,000 contracts on the tape, so nothing to sneeze at out here in the beans meal. And trading like a bit of an equity this week, 37% of it going up in the contract that goes out in, about 8 days. So we got some near-dated paper here going up in the beans. If you want to go a little bit farther out to Dees, that has 43 days left to go. That did 28.5% of the paper as well. Maybe we'll do a little bit of both and see. Because the ags don't usually trade that near-dated, listeners. That makes it somewhat interesting. Obviously, folks want to get some near-dated positions, get some gamma on. Who could argue? It's moving around quite a bit. So let's see what's going on in both. What is the vol in the contract going out in 8 days? That's a 22. That's down almost 3 points. And going out to D's, the vol is about 22.5, down about 2 points out there. So interesting stuff. Skew-wise, the puts are exactly even, or they were, I should say, exactly even to the at-the-money last week. 0.0, no bid, no discount in either direction. This week, they're a little bit cheaper in the 8-day contract, 1.1% cheap. The calls, 3.2% rich last week. This week, 3.7% rich. And now going out to December, the 43-day contract, 2.2% cheap were the puts there. This week, 1.9% cheap. And the calls were pretty bid last week, 6% bid last week, 3%. So getting cut in half this week. In terms of action, though, the most active contract out here was the 390 puts. They're expiring in 8 days, doing about 3,500 contracts this week. They're pretty active actually all week long. 1,100 on Monday, 700 on Tuesday, 1,600 on Wednesday, opening all week. And weirdly enough, only 31 today. So not a lot of paper going up today, but active outside of that all throughout the rest of the week. And again, opening on the 390 puts. These have 8 days to go. We're at a 411 right now. So 21 handles, listeners. Can we do it? Interesting to see out there. In terms of after that, we drop off a bit to the 380 put. So even farther out of the money, listeners, doing about 1,400 contracts. The big day for those was Wednesday, about 1,000, and the rest kind of scattered throughout the week. Again, not much going up today at all. So today kind of a quiet day for soybean meal, which is interesting. And then we also have some action. It's not all puts, listeners. We go a little bit farther out. We go to the D's contract. We have the 430 calls doing about 1,600 contracts. And these were closing pretty much all week long. The big day for these was Tuesday, about 1,080 on Tuesday, most of that closing. The rest kind of scattered throughout the week and mostly closing there as well. So folks bailing on the 430 calls, which is undoubtedly why we saw that bid for the call wing get cut in half this week, listeners. And then lots of action on the 390 and 380 puts going out in about 8 days. So let's go out a little farther, see if we see anything else. The 420 calls in March of next year, also doing about 1,000 contracts this week. All that on Tuesday. 1,000 on Tuesday, all opening. No other legs, no other spreads, nothing else like that. Just straight opening on the March 420 calls. Let's see, the future out there in March is at a 402, so it's got a little bit longer road to go on those, but intriguing nonetheless. Let's look at any other interesting and or aberrant prints. That's most of it here for good old soybean meal, listeners. But since we're hanging out in the ags, we had so many ags lighting it up this week. Unfortunately, again, we can't do oats, can't really do lumber. But let's go out to the livestock, listeners. Our old friend Lean Hogs. We're going to scroll down in the product family, stay in ags. We're going to go down past corn, past wheat, past soybeans, into the livestock. And then we're going to click on 2 down from there. We're going to skip over live cattle and go to lean hogs. Again, doing 22,000 contracts this week, so a fairly robust week. If you don't follow lean hogs, and hey, who can blame you? 93.5 is where the front contract is trading right now, up about $0.50, or obviously close to 0.5% out there. Looks like the lion's share of the paper, though, nearly 60%, 58% to be precise, going up. In the D's contract, it has 62 days to go. That future is at about an 80.5, so huge difference here between the October and D's futures. I don't even see a Nove contract in here, which is kind of interesting. Again, hogs kind of have their own rules of engagement out here. So 58% going up in that D's contract. Got 62 days to go. What is the vol out there? About a 27.40. That's off about exactly 3 points on the week. So vol coming in on the hogs here. In terms of skew, last week the puts 12.1% bid. This week, 5.7% bid. So the puts coming in quite a bit. The calls, 4.7% cheap. Last week, this week, 5.5% cheap. So calls getting a little bit cheaper. Puts getting their bid cut pretty much in half. Again, kind of similar to the calls we just saw in soybean meal. In terms of action, what was leading the dance out here this week? It was the 70 puts, which is undoubtedly why we saw such action in the put wing here in December. The 70 puts in December doing 1,700 contracts. That was the big dog this week. Trading pretty actively throughout the week, except Tuesday. A goose egg on Tuesday, 500 on Monday, 700 on Wednesday, 600 today. So opening and closing throughout the week, which is kind of interesting. So by the way, someone cutting that put wing pretty much in half. We also saw about 1,300 of the 72 puts in December also trading this week. This time, all of that pretty much 1,100 going up on Monday. So the other 200 scattered throughout the week. Most of that opening as well. So seen a lot of put paper out here this week. Also 1,200 of the 75 puts. The big day for those actually Wednesday, 640 on Wednesday, 375 on Monday, about 120 today, and not much on Tuesday. So intriguing stuff here. 70, 72, and 75 puts in December. Kind of the 1, 2, and 3 spots out here. Given the fact that put wing was pretty much cut in half, you got to assume there was some net selling going on out there in those contracts. Not to be outdone, also the 64 puts doing about 1,200 contracts as well. 925 of that on Monday. So if 75 was not out of the money enough for you listeners, 64 puts also active out here. Let's go a little farther out, see what else we see. It wasn't all puts, listeners. There were some calls trading as well. The 93 calls going out tomorrow. 1 day left calls. The future there is 93.5, listeners. So obviously the 93 call, pretty much the at-the-money strike. Trading about 1,100 contracts this week. So a pretty active week for these. 879 on Tuesday. All that opening, and the rest kind of scattered throughout the week. So some folks coming to play on the 93 calls. Going out tomorrow. They were buying those bad boys. I can't see the premium they got for these right now, but they're buying those bad boys. It seems like it's working out so far for them. This trend continues here into tomorrow's expiration. Any other interesting and or aberrant prints? Nothing else really crazy out here in the hogs. There you go, listeners. There's a little bit of a taste of your hashtag hog love. So hogs, talked about oats, did the meal, talked about lumber. I think that's pretty much it for the ags, listeners. As we keep on rolling, we have a little bit of surprise last week with the metals, and we got some more of that this week. In fact, our number 1 and number 2 dark side movers are in the metals. So let's head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. And, of course, get into that asset class, a drop down, pop out of ags. You're going to scroll all the way down, almost to the bottom. One notch from the bottom, listeners. Right above vol indexes, you will find the metals. Then we're going to hang out in the precious product family. Going to go down one notch below gold to silver. If you're asking, what about palladium, listeners? Yeah, not really any paper going up in palladium this week. So alas, can't hang our hats out there. But silver is doing its darndest to make up for it this week. Again, silver off about 8.75% this week, up 9.5% last week. So big action out here in silver. I know a lot of you play silver through SLV. I know Uncle Mike's always talking about it on the option. I forgot to ask him about it this week. He's our big kind of resident silver bull out there. What he thought about these crazy moves out there in silver. Probably get his thoughts on it on the Monday episode of the option block. But if you folks been playing along in silver, are you out there in SLV, maybe writing some puts, buying some calls? What are you up to? Hit us up. Let us know. I'm curious what you folks are up to. What do you make of these mad moves here in the number 2 precious metal? Where is silver right now? 1887. So coming off quite a bit, coming off 1.4 handles. So it had quite the run last week. And like I said, it's given most of that back, off 6.81% just through to today from Monday session. You go all the way back, like we said, to last week's show. It's off nearly 9%. So they are coming for silver this week, listeners. And in terms of action, like we said, about 32, almost 33,000 contracts on the tape right now. A little over a quarter, about 27.4% of that coming in the November contract. And this one has 13 days to go. So we'll hang out there. It's right at our cusp, our frame of reference, listeners. We can hang out in a contract that has a little bit less than 14 days to go. In terms of the vol, what is silver vol right now? 35.30 in this contract. That's up about 0.75 of a point. So you know anything about precious metals, vol, we talked about this with gold vol as well. Talked about this with Nick on our Pro Q&A earlier this week as well. He's a big fan of gold futures and buying puts against them. He thinks the movement out there is enough to what he calls pay the rent, pay your rent out there, cover your decay on your options and actually make some money scalping. And he thinks that's going on in gold. And right now, the vol in silver, 35.30. So that's pretty lofty for precious metals. Again, the bids in the vol for these precious metals tend not to last that long. So we'll see. We'll see if this is a longer term move for vol or if it's going to just come off again once whatever is going on out there with silver, when this mitigates and the underlying starts to settle down a little bit. I have a feeling it's the latter. If past is prologue, that's certainly the case, but you never know. This could be the aberrant moment, the exception that proves the rule, listeners. And in terms of action, like I said, we're at an 1887 right now. It's the 18 even puts doing 1,500 contracts that are leading the dance out here. Actually, you know what? I take it back, listeners. This is why you always got to scroll all the way down to the bottom of the page in the TWIFO report, listeners. Because after all, it is a precious metal. What fun would it be without some nonsense to the upside? So that's what we got, listeners. We got more nonsense to the upside. The 30 calls in March of next year. So 30. Yes, I said we're at an 18 and change this week. 30 calls doing 2,100 contracts this week. All of that on Wednesday. Someone closed out 2,100 pretty much of the 30 calls. And not to be outdone, they also closed out the 33 halves 1,500 times. So looks like they had a bit of a ratio vertical there. And just took it all off this week. The 33 half March vertical here. Won by not quite 1.5, but pretty close to it there. So a bit of a ratio vertical. Either way, they took that bad boy off this week. That's why we have our number one trade, actually the 30 calls. I wasn't expecting that, but it is a precious metal. You never know what's going to lurk. At least it's not some of these other funky things we're seeing in gold or the $1 wide verticals we're seeing going up for size in WTI these days, which we also discussed with Nick on the Pro Q&As, his thoughts about those execution. What's really going on behind the scenes with those trades? Again, if you're missing the Pro Q&As, listeners, you're really missing out on a heck of a lot. So 30 calls and 33 halves. That means it's a precious metal. Trading just like a precious metal again. Let's get back to the more relevant paper. Let's go back here to the November 18 puts doing 1,500 contracts this week. And unlike our call friends there that pretty much all printed in one day, these 18 puts, 1,500 contracts, trading pretty actively throughout the week. Every day this week they put up some paper and all of it closing. So folks are bailing on the 18 puts this week. And then also saw some 17 puts going up as well. Also, looks like they were bailing on those as well, but less, but only 800 of those this week. So the 1,800 puts doing 1,500 contracts. That put wing got a little bit cheaper out there in the November contracts. So it looks like they were probably net bailing on some of these. Maybe they decided earlier in the week before we started the sell-off that maybe the 18 put was a bridge too far and they didn't want to hold it anymore. They dumped it, and then lo and behold, we are selling off pretty aggressively. So maybe they traded all week long, which is interesting. It's like folks are bailing on them all week long. So obviously they could have been sitting on some of those long puts, and as we kept moving lower, they kept letting them go, taking their profits. That also something you want to do in markets like this. So that could also be accounting for what's going on with that skew. Either way, action pretty much throughout the week, closing throughout the week, and the put wing getting cheaper as a result. Let's look really quickly. Any other interesting prints? Like we got the 21 calls and Dees doing almost 1,000 contracts this week. Again, trading pretty actively throughout the week and back and forth. That Dees futures at a 19.10, so 21 is within 2 points of that future, but still a pretty decent way to go. So intriguing stuff here, kind of across the board. Silver doing some numbers this week. Again, hit us up, listeners, if you folks have been dipping your toes into the number 2 precious metal out there. As we keep on rolling, it is a rock'em sock'em week and day for the equity markets. Can you believe this whipsaw we're seeing out there? So we've got to head out to equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, welcome to the wonderful world of equities. And man, what a just day in the equity markets. Of course, we had CPI numbers this morning. And as we talked about earlier on the network, those numbers can be subjective. Folks can read them multiple different ways. You can focus on the net number and say, well, maybe it wasn't as high as we expected, so maybe that's good, but also the core number was atrocious, the worst we've seen in 40 years. So, again, glass half full, glass half empty. And the market reflecting that today, selling off hard in all the major indices this morning. S&P actually breaking 3,500 ever so briefly this morning, and then just turning on a dime and exploding to the upside. S&P up 2.75% now after selling off multiple percent earlier in the morning. So we were, again, a little bit shy of 3,500, somewhere at the 44.90 range, 36.73. So we're closing in on a 200-point range in the S&P today. These are insane numbers, listeners. We know we have a lot of newer listeners, a lot of newer entrants to the market. So maybe you're kind of expecting this now. This is kind of normal to you. Trust me, this is not normal. S&P does not normally swing 200 points intraday. So just buckle in, strap in if you're one of the new listeners out there. There's a lot of madness going on. Just be careful. Keep your powder dry. Only dive in on products you can understand. As much as anyone can understand what's going on in these markets right now, you fear understanding what's going on. Or maybe you want to be on the sidelines until a lot of this stuff settles down. Who can blame you for that either? A lot of people have been coming on our pro lately, advocating for the joys and optionality of cash. This certainly has a bit of a resonance when things are whipsawing like mad out there. Either way, whipsawing in the equities means a whole heck of a lot of vol on the screen. Let's head on out to the vol land now, listeners. RVX, the VIX of the Russell 2000, 36.60 when we kicked off the show, up about 1.5 points from this time last week. VIX cash itself, 32 and change, about 32.16, up about 260 from where it was this time last week. And again, that shows kind of the challenges we've had, those of you who were loading up on VIX upside, to hedge yourself against some sort of downturn in the markets. That's why I've always said, be careful thinking of VIX as a hedge. It doesn't always do what you think it might. And that's been the case right now. We've been selling off aggressively in the market, and VIX is higher, but not perhaps the explosive upside force you would hope for to offset your losses in other areas. VIX 32.16, like we say right now. VVIX, the vol of vol, a little north of 100, 140, up 5.5 points, and maybe argue should be higher given what we're seeing. Massive intraday swings out there. You can't expect vol of vol, or really VIX, to get much lower when the indices are just whipsawing around this much. Vol Q itself, the at-the-money vol of the NASDAQ, 36 and about a third, up about 3.2 points from where it was this time last week. Puts the VIX to RVX spread, so the large cap to small cap spread, 4.4 points. That's about 1.2 points tighter than what we saw this week. And again, that's because VIX just moving more than RVX right now. And it moved about 1.2 points more. So there you go. That's your spread tightening up right there. VIX to vol Q, so the S&P 500 to the NASDAQ vol spread at about a 4.2. Remember, that spread last week was flat. It was even money. There was no bid in either direction between S&P and NASDAQ vol. So it's about a 4.2 this week. That makes it 4.2 points wider. It was literally unched, which again is crazy. I'll have to get Scott Nations back on to explore those ratios in a little bit more detail. As we get on out to the equity complex, let's start in our old friend, the Russell 2000, listeners. Get into that drop down, go into equity indices, US index, E-mini, and I'm going to hang out in the Russell 2000 first. For all the action we're seeing out there in the Russell 2000, it's at a 1734, up about 2730 or 1.6% just since Monday's show. If you go back since our show last week, it's off still about 2.35%. So it's been swinging around. We are seeing some numbers in a lot of the small cap products. For whatever reason, kind of a lighter week still for RUD out there, which is kind of interesting. Only about 13,000 contracts on the tape this week. So sometimes maybe things are just moving so hot and heavy, fast and furious. Folks can't settle down to trade this one. But of that paper, it looks like the clear winner this week, usually an equity, you're going to have something that's going out tomorrow, right? We'll check on the S&P in a minute and see. That's probably the deal out there. But in small caps right now, the 1,500 puts in December doing 1,500 contracts. So that's our big dog this week. That's kind of surprising. 1,500 puts out here. Let's see. They were trading 1,000 of them went up on Tuesday, all opening, and then 500 more. Actually, it looks like they took some off the next day on Wednesday. So that could have been a bit of a quick scalp. Again, total of 1,500. Looks like they might have taken some off the next day. So actually looks like there was a 1,500 1620 put vertical that went up on Wednesday, the day after that big print in the 1,500 puts, and that was closing for that. So maybe taking off a put spread, and one of the strikes just happened to line up with the 1,500s. Either way, 1,500 of those going up this week out here, as well as looks like a 1,500 1620 put spread. So 120 point wide put spread. That's interesting. All of that in December, listeners. So we'll head out to December. What is the vol out here? About 32.15. That's about 4 points below what we're talking about here in RVX. But again, RVX is a 30-day measure, and we're going out about 63 days for the D's contract. In terms of skew, the puts last week, 11.8% bid. This week, 12.8% bid. So puts catch a little bit of a bid. The calls, 9.2% cheap. Last week, this week, 10.7% cheap. 1,500 puts. Again, those are the big dog. And then that vertical in December, kind of the big prints. Let's see if anything else is really blowing the doors off out here this week. 16 half puts going out tomorrow. Pretty active. Most of that today, and we're at a 1734 in that contract. So interesting levels going up out here. Speaking of out of the money puts, let's go check really quick into the good old E-mini S&P. Obviously, it's going to be a bit of a banger week out there. Let's see how much paper are we talking about in our old friend, the E-mini listeners. There we go. All right. Again. Yeah, 4.2 million contracts on the tape for the S&P 500 E-mini listeners. Again, that shouldn't come as a surprise. We are whipsawing all over the place. Right now, we are net on the week, up 1%, up 38 handles after this just insane whipsaw out here. And once again, these folks cannot get enough of blasting away at these freaking garbage puts. 71,000 of the 3130 puts going up this morning. I should say going out today. They've traded all week. 26,000 more going up this morning. They've just been printing all week. And then beyond that, we have 60,000 of the 3,000 puts. 30,000 of the 31 half puts. I mean, it just goes on like that. 3,100 puts going out in a day as well. These did 62,000 all that today. Someone's putting up about 60,000. 1,200 traded on Monday. The rest, 60,000 of the 3,100 puts going out in a day. 3,100 puts, a nickel, 10,000 more for a nickel. I mean, again, I said it before, listeners. You are literally picking up nickels before the steamroller if you're doing this. 9,000 more for a nickel. That's what they're doing here. So, all right. So, yes, funky near-dated put paper is kind of obscuring everything. Let's go a little bit farther out here. 30 puts trading 40,000. Let's go a little bit farther out, see if we can find meteor puts to talk about here. 3,400 puts going out in 8 days. Those are at least within 300 handles. So those are something, doing 30,000 contracts this week. Seems like those are the big dog. We're going to hang out there, listeners. The week 3 contract that has about 8 days left to go, which is an eternity in equities these days. 30,000 of the 3,400 puts going up out there. 14,000 of that going up today. So nearly half going up today. 9,000 today. 25,000 on the week of the 3,500 puts also trading, also going out in 8 days. And not to be outdone, 22,000 of the 2,800 puts have gone up. 19,000 of that this morning as well. So just an insane put palooza. 2,800 in 8 days, listeners. You know, where these markets are moving, 200 points intraday, it is technically possible. which again is just absolutely insane to say out loud. We could spend the rest of the show 3,200 puts here in Dees going up 18,000 times this week. Oh, 2,000 puts in January went up 4,500 times this week. 4,000 of that yesterday, all opening. So someone's opening on the 2,000 strike. My goodness. It's just a pick your poison, listeners. We could do the whole show on the E-mini S&P and find weirdness for days. Instead, let's keep on rolling. Haven't touched on it much on the show of late, but they were dominating our dark side this week as well. It was the rates, so let's head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. We had this week at number 4 to the dark side, Eurodollars off 6.8%. Right above it, the 3-month SOFR off 7.2%. So we're going to hang out there. This is the ostensible replacement, and it looks like it's doing a fair job of that. 2.3 million contracts. We also talked about this with Nick on the Pro Q&A this week as well. He's an old school Eurodollars guy, and his thoughts on whether SOFR can actually take the place of Eurodollars. And so far, at least, the answer seems to be resounding yes. If you want to hear more about the nitty gritty of why that's challenging and his thoughts on the evolution there, theoptioninsider.com/pro is the place to go. Like I said, 2.3 million contracts on the tape. The big dog out here, though, 38.2% of the paper going up in the whites. The Dees contract here in the whites. Those are obviously, that front year's worth of contracts there. Listen, remember, these contracts go out for effectively a decade. So they have to break them up into colors and strips. I encourage you, check out the educational material over there at CME explaining the packs and bundles and the colors, because it can be very confusing when you're quoting a bunch of different Dees contracts or March contracts, whatever they are. They all expire on the same day, but different time. It's a crazy time, listeners. Crazy product, crazy times, and crazy volume out here. 38.2% going up in the whites. Dees contract has 64 days. That's the thing. You have multiple Deeses, right? You have Dees going up, multiple contracts expiring on the same day, but you're talking different tenors here throughout the term structure here. So again, you can get lost in the weeds. Go check them out. You know, the whites, the reds, the greens, the blues, all the way out to, I believe it's the coppers. And you'll see why these products can be so confusing to some people at the outset here. But nearly 40% of an explosive week going up here in the Dees contract here in the whites. That has 64 days to go. We're going to hang out there. The value here, it's like 95.35 out there for that SOFR future. It's off about 0.2 of a point this week. So not a huge move this week. It all came after our show last week, pretty much. In terms of vol, what is the vol out here? Again, Eurodollars and SOFR, the only place you can really go in the rates complex to get any semblance of vol. And there's a fair amount of it, 83.70, off 7.9 points this week. So that's a heck of a lot of vol. You're threatening triple digits. So that you're talking crypto, equity vol there, biotech vol, and it's a rate product. So that makes it attractive for a lot of people out there as well. In terms of skew, 4.2% cheap with the puts. Last week, 9.4% cheap. This week, the calls, about 0.5% bid last week. This week, 3.2% bid. And the big dog out here, and again, a 2.3 million contract day. So take a lot of the other complexes we talked about, add them together outside of the E-mini, obviously, and they still wouldn't equate to this product. We're talking the 95 3/4 calls. Again, the Dees in the whites doing 124,789 contracts. That is far and away the most active contract. And this is the other thing that's interesting about Eurodollars. And by relation, SOFR. You put up crazy numbers. You look at the numbers here. 94,000 traded on Tuesday, 27,000 on Wednesday. Today, 1,200. Monday, 2,000. So it could do explosive numbers and then nothing. All in the same week. That's what makes these products, again, so fascinating. The ebb and flow of the volume out here. It's crazy. Then right behind it, we have the 95 7/8. Don't see that too often anymore. 95 and 7/8 calls, 107,000 of those. Again, the big day Tuesday, 58,000 there, 37,000 on Wednesday. A little bit better today, 8,500, and then only 2,000 on Monday again. So they can give and take in the same week, and just, again, fascinating to watch that. Right behind it, we have the 95 and 5/8. My old S&P days coming back. Teenies, eighths. It's fun, listeners. 95 and 5/8 calls. They did 93,500 contracts this week. Unlike the other two, which did a whole heck of a lot of nothing today, this one had its biggest day today. 40,000 going up today, 30,000 yesterday, 20,000 on Tuesday, and only 3,000 on Monday. So it's kind of the polar opposite of the other two. The other two kind of fell off a cliff today, and the 5/8 calls, that's where all the action is today for 40,000 going up today alone. So, yeah, the paper here, it can be challenging. I get it, to come to grips with. That's why I think for an early approach for a lot of you, the TWIFO report is your best way to go, because it encapsulates a lot of what's going on out here and kind of gives you a bit of a snapshot that is a little bit more digestible than if you just kind of try to pull up a chain for Eurodollars and your eyes will glaze over very quickly. So start with the TWIFO report and then keep on rolling. As we keep on rolling, we're kind of come up against it, but let's see if we can squeeze in a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, we are coming up against it here. Let's go quickly out to our question of the week right now. We asked you this week, again, revisiting a topic we asked you at the beginning of the year. Our first question of the week this year was, if you had to pick one of these four asset classes, VIX, Bitcoin, WTI, or SPX, and buy a 10% out of the money call on them, expiring at the end of the year, which one would you choose? 34% of you chose the SPX. It was a pretty contentious race, actually. We saw some intriguing back and forth out there, but a little bit more than a third of you chose the SPX. Again, we were at 4,600 then, so you needed a nice pop, getting close to 5,000 for that to pay off. Alas, at least so far, not the case. And then, so we thought it was a good time to revisit that. Same question, buying a 10% out of the money call expiring at the end of the year on one of these asset classes. Which one would you choose? Gave you the same choices: VIX, Bitcoin, WTI, and SPX. What is your choice, listeners? I'm curious. Get on over to @options if you haven't voted yet. Right now, 46.9% of you are saying you want to buy the SPX. And you dang near got that 10% move from peak to trough today. 34.4% of you choosing WTI, and then a tie for the bottom, 9.4% of you choosing Bitcoin. We also got this question or comment here from Kelvin Hone. He says, "Hi, Mark. Thank you for taking the time to answer my questions last time regarding covered calls and puts on futures. After your response, I have moved forward and begun forward testing a futures and options on futures strategy with $100,000 in paper money. Rest assured, I value education above everything. Will not trade real money until I am confident in what I know about futures and options on futures. I don't plan on taking out a home equity line of credit and risking it all on 0 day to expiration futures anytime soon." Well, I'm glad to hear it. Kelvin, you also followed up with a pretty epic question about puts and short futures in the paper money, including all the transactions, which we love, you folks. When you include details, that makes it easier for us. That's a little bit too epic to squeeze onto the show right now. Luckily for you, Kelvin, because we like you, we did put your question to the guy who actually created the Quick Strike platform. He's a guy who knows things too about futures options execution on the Pro Q&A earlier this week. So check that out. We have sent you the information there as well, for you can check it out. So check that question out there. Epic answer. Should be a fun one. Thanks for all the great questions. We're coming up against it. All right. Man, time flies when it's just me talking about futures options. There's a lot to talk about this week. Go figure. Make sure, listeners, if you're not doing this, cmegroup.com/TWIFO is the place to go. If you have questions about any of these asset classes, chances are the answers are lurking there somewhere in those reports. They're nice, easily digestible snapshots of all the different assets. You can take your time, peruse through them. They're running all the time, so they never shut down. You want to check 3-month SOFR Saturday? Go ahead, have a ball. It's running for you there all the time, listeners. And then, of course, you want to learn more about all things small caps. FTSE Russell, FTSERussell.com is the place to go to learn more. Give him a follow on Twitter as well, at FTSE Russell is the place to go. We got to get on out of here. That's going to conclude our broadcast day today. Back again tomorrow with a trifecta of goodness, listeners. For all you on-demand folks, we will round out your broadcast week with a good taste of volatility views. I got a feeling it's going to be a little bit of vol to talk about on the show tomorrow, so make sure you tune in for that one. And then after that, for all you pro folks, we've got a double dose of goodness. We've got options oddities after volatility views to break down the mad week that was from an unusual activity perspective. And then after that, because we love you folks and because the producers hate my voice, we're going to do a pro Q&A session. You get double pro Q&As this week with Eric from Vellum Capital over there talking about all the madness and volatility in the world of crypto, answering all your questions there. So it's going to be a fun time. Check it out if you haven't already. TheOptionsInsider.com/pro is the place to go. We got to get on out of here. Back again tomorrow for noon vol views, and then back again next week. Another episode of This Week in Futures Options. Stay safe out there, good buddy.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.